Hi Mortgage Heroes, past clients, you are getting this video message because you are either a past client of mine, of William's, or of Tanya's, and we wanted to make this message today because of the announcement that the Federal Reserve cut rates in an emergency rate cut by 0.5%. So I want to explain really quickly what that means and then also what that means to you. So in general, the Federal Reserve is trying to stave off any potential economic threat that the coronavirus may have on the overall broad economy. Now, what they're doing is they're cutting the rate down so it becomes less expensive to borrow money. Now, when the Fed does this, that short-term rate affects things like car loans, lines of credit, and credit cards. That does not directly affect mortgage rates. However, it's commonly advertised and marketed that the Fed just dropped rates, refinance now. And that is true, subject to a couple of things. One of those things is that the mortgage market actually has cash infusion coming in, which allows rates to go down. So really quickly, I want to talk about that. So when the Fed reserves a rate that reduces the rate like they did, they're doing it for a reason. It's either because they're trying to stimulate the economy, or in this case, they're trying to protect the economy from going to a screeching halt or a massive slowdown that could hurt us financially very bad. Now, it should be noted that the last time they did this was December of 2008. Some of you have known us all the way since we started this business in 2005, and we were there during the financial collapse, and that was really, really difficult. So it says something that today, Fed Chairman Powell came out and said, we're cutting rates by 0.5% in order to help combat any slowing that might happen in the economy because of coronavirus. So that in itself is a big deal. Now, what that means is you're going to see a continued flow of money into safe haven investments or safe securities. And one of those safe securities is mortgage-backed securities. That's where our mortgage money comes from. So it's pools of money that gets lent out to homeowners like you and like me. And so when the Fed cuts their rate down, it becomes cheaper for companies and businesses to borrow and lend money. But what also happens, it puts pressure into the bond market where mortgage-backed securities are fueled. And so when that happens, rates also go down for homeowners. And that's what you're gonna see. You'll probably start seeing television advertising, you'll hear radio advertising, but we wanted to make this special message to clarify for you what it means when the Fed drops their rate and how you could actually get a lower mortgage rate. Now, with the fears of the coronavirus kind of brewing and growing kind of every day, it is causing some real honest fear in the global markets and also the central banks of other countries. You already saw Australia reduce their rate the other day. The United States just did it today. Now, others that are planning to do so will probably do so quickly, and those who have not yet done it are expected to at some point. What I really want to let you guys know today is that if you have not yet talked to us about if it's the right time to refinance or should you refinance, this is absolutely the time you need to have that conversation. Rates are probably going to be extremely low, the lowest we've ever seen as far as the 30-year fixed is concerned. This is the lowest that you're probably going to see, I would dare to say, in our lifetime. The financial crisis was one thing, but this potential global contagion is causing such fear in the financial markets that mortgage rates are going to be the lowest you might ever see in your adult life. So I don't say that to fear you guys or to scare people into momentum or action, but I'm saying that to be honest. We look at the market every single day and we analyze what's going on. We listen to people who are economically way smarter than us, and they're all saying the same thing that we are, and they're seeing all the same things that we're seeing. So if that's of any value, we're in lockstep with what the main economists and the main players who are seeing what's going to happen and what's going to unfold happen. So we're in lockstep with that. it's important that you ask the questions now. We actually just finished our team meeting this morning talking about this very thing and how we could be best equipped to help homeowners save money, refinance, and get into a lower rate. So if you're watching this and that's you, you can click the button below and you're gonna see, it's gonna say contact William or contact Brian right away, and they can have a discussion with you. And then in the back office, we're available to help support on the processing side when you do send your documents in, so we can get you into the process and take advantage of the low rates that are coming. If you are aware of someone who's close to you that you work with, a friend, a family member, even a neighbor, someone who doesn't know where to go, or maybe they're new to town and they don't know who to trust, I'd ask that you share this video with them. Help inform people of what's actually happening rather than just reading the headlines and making assumptions. And then also, I encourage them to just pick up the phone or send an email so we can have a conversation. More important than anything in all this is having the right information and knowing what it means to you specifically. So even if they're not interested in refinancing or buying a home, that's fine. Let's at least have the conversation to help clarify any myths and disbeliefs. And let's also educate some people so that they know what they can be doing to put themselves in the best position in the weeks and months ahead. Now, my personal forecast for this is that we're going to see low rates like this for at least through February, but candidly, I have to tell you, I think it's gonna be more like 3 months, maybe even as long as 6 months. The coronavirus is like one thing with the economic pressure. You also have the actual factory shutdowns that happened for a long time that are starting to slowly come back on board and ease the supply chain problem we've been having from a product perspective. But you have the growing amount of cases kind of happening around the world. Oh, and also there's an election in November. So there's so much pressure in and around the system right now that it just honestly can't handle rates going up a whole percent or a 1.5%. Now, I will also tell you that if you are thinking that rates are going to go down another 1% or 1.5%, I also don't think that's likely. There is a certain limit to what rate cuts can do before they actually become punitive and they become unhelpful. So, you know, there is a method to the madness, as they say, for why interest rates are cut, but they also cannot be overcut. So don't look to take so much advantage of the market that you miss out on what's in front of you. So that's my forecast. I'm Andy here at Mortgage Heroes and Business Development. Thank you so much for watching. Thank you for sharing this with a friend. And we hope that you stay healthy out there. And we'll be here to answer any questions you have when you're ready. Thanks for watching.